What if inflation never returns to normal? What if housing prices continue to go straight up forever? This is what we are going to discuss right here, right now, today. Welcome, truth seekers. You've landed in the right place. I want to bring you what others simply can't. So join this grassroots movement of nearly 300,000 people. Hit that subscribe and notification beside it so that we can conquer this together. Speaking of which, you want to know about real estate, I'm going to bring you all those details right here, beginning with something related to the interest rate aspect. First thing is right here. Can you believe this? 91.8% of US homeowners who currently have a mortgage are paying for it at an interest rate that's below 6%. They're locking in the cheap financing before rates spiked around the middle of last year. What is different about this versus some other countries is that the US has this wonderful aspect where they can lock that in for an extended period. In Canada, in Australia, other places, you're basically within a 3 to 5 year range. So I think the dynamics of these higher interest rates will be very different in a place like Canada than they will be in the United States. And I want to talk about that further. What do these increases mean to you? And with inflation coming down, how does that affect you exactly? I'll break that down here in this video, so stick with me. Now, of course, what we're seeing with mortgage rates, we are off the peak. They peaked out over 7% in the United States, but we have seen that started to come down. Not by much, but the expectation is throughout the second half of 2023 that they would start to decline. That makes these borrowing costs overall less expensive. And if people are paying less on interest, they're going to be able to buy more stuff. I'll talk about that here today. Look at this. The US housing market is so unaffordable. Over 75% of homes on the market are too expensive for middle-class buyers. That is a very bad sign. The housing affordability crisis has priced middle-income buyers has priced them out. Thinking about this, you look at the buyers earning up to $75,000 could only afford 23% of the properties listed for sale. And that really shows us what had happened in 2020, people moving out. They're priced out. And so they go into these tertiary cities, these smaller cities and towns, satellite cities that exist around the main centers. But that's not exactly a good thing because the people in those areas, now they are priced out. And they're not happy. They're saying, you can work from home, you belong over there, don't come over here, and you're pushing up the price. We cannot afford that because the wages that we make here are not acceptable for the prices. And this is creating this effect, this knock-on effect, one by one, all related to what has happened with inflation. And we're not going to get around that inflation, despite the fact that inflation in the United States, based on some metrics, are around 4%. What do you think is going to happen over an extended period where people get these housing prices that continue to go up? They can't afford to buy their, let's just say with their disposable income, if there's nothing left, they're not going to be able to buy other things that they want. All the latest iPhones and all the latest fun stuff because they've got their house to pay for. That's the one that they're willing to, I wouldn't say splurge on, but they're willing to accept higher prices on real estate versus on, something that they just don't need, maybe going out to the restaurants and all that. So that's more of what we'll discuss in a moment. Home prices are finished falling after a 10% drop, but no rebound yet. So depending on where you look, each state is different. And of course, you look around the world, there has been a decline, of course, to some degree, depends on where you are. But we are talking about from some seriously high levels. That brings me to Jerome Powell and what he had to say about the real estate market. Housing is certainly very interest rate sensitive. It's one of the first places that is either helped by low interest rates or held back by higher interest rates. And we certainly saw that over the course of the last year. This is a quote. "We now see housing putting in a bottom and maybe moving up a bit." We're watching that situation carefully. I do think We'll see rents and housing prices filtering through housing services inflation, and I don't see them coming up quickly. I see them wandering around a low level. Somehow, the housing prices that are going up, even though, you could see the metrics, yeah, they're going down, but look at the prices. They are extremely high. They have gone up. And even if it, inflation, like year over year growth, is not there, we are still talking about prices that are near record highs. At the same time, rents are going up, energy prices going up, food prices going up, all these things are going up. So of course, these are the essentials for people. It's not clothing and restaurants and all that. These prices are elevated. So you're looking at this and you're trying to suggest that, oh, it's just going to go up slowly. No, that isn't really the case. We have no evidence to support that. But of course, this is Fed speak. They like to talk in a different language than you and I because they want to make sure that they get a certain message across to the markets. It's all about the markets, not about you and I. Okay, here we have it, credit cards and their impact on interest rates as the Fed sets them. And you could see the average credit card was 20.44% interest rates. I mean, how in the world is somebody ever going to pay off a balance when the interest rate is over 20%? They also talk about auto loans in here, and that is one, it is very worrisome to see. I just saw a video of a couple people. They were talking about the prices that they were paying for their loans, and one individual was paying about $1,000 or $1,200. Another was paying $1,500 and change. And this is US dollar. And I mean, how in the world are you paying $1,500 for a vehicle? I forget what it was. It was probably a nice one, but it wasn't something spectacular. It wasn't a Rolls Royce. The people's priorities are off today. They are off. I see people spending way too much money at a time in which we should be investing in ourselves, investing in our time that we have. Okay? Some of the best things in life are free, and yet people are going out there and they're putting all their money into that which is wasteful, truly wasteful. And that's just my opinion about the situation, but this doesn't end well. Having all of this debt, I'm not trying to suggest that, prices go up and a cycle continues, everything's fine. I'm not saying that. When you go into these debt cycles, it ends very badly. It really does. And you could push the prices up. This is terrible. We need deflation. That's what we need. But we're not going to get that, at least not yet, because as soon as prices do come down in any meaningful way, we're going to see the Federal Reserve hit you right in the backside, smack you upside the face, and wake you up. If it was me doing that, it would be as a coach, get going, make it happen, do what you got to do as an individual. But instead, the Federal Reserve is doing it because they get off on it or something. Okay, not a good thing. Not a good thing unless you're into that. But hey, what Janet and I do in private, we'll leave that alone. Anyway, the Fed's pause on interest rates is a blow to affordable housing in California. Mortgage rates are likely to remain high despite the Fed's pause on interest rates. Demand is still strong for home ownership, but yes, as soon as we can lower the rates back, I think the real estate market will continue to flourish again. It's really taken a hit in California. There's no question about that. There is very little in terms of affordable housing. But you got to understand what's happening here is the fact that the prices are so aggressively high. Like the surge that they had in 2020 was unbelievable. Rents along the same thing. And they're just going to put these policies in place and it's just going to make things worse. Okay. So there is no way that they'll stop that. This is talking about further into this issue. And I wanted to mention what's going on with interest rates historically, because I don't think a lot of people understand this. History bears this out that in the 1980s, mortgage rates soared as high as 18%. Americans still bought homes. In the 90s, rates of 8% and 9% were common. Americans continued to buy homes, and during 2004, 2007, mortgage rates were higher than they were today, and prices still went up. Now, I want to just clarify that for a minute here. The combination of elevated mortgage rates and steep home prices home price growth over the last few years has greatly reduced home affordability. And that's the one that I think really needs to be understood, because it's not just you take that one metric and you just say, well, you know what, hey, mortgage rates have been higher before, there's nothing. The amount of debt that people are in today, to me, it's worrisome. But also at the same time, that has to be factored in, okay? Because people have so much on a mortgage. It's not, people were carrying small mortgages before. Yeah, they were at these prices, but even when factored in, like income ratio factored in, the mortgage is just substantial. And then you go into the auto loans. Like I'm telling you, these people are paying $1,000, $1,500 a month just on their car loan. I mean, that's all on top of this. Yeah, but they have 24 bucks at the end of each month as a buffer. So yeah, I'm sure they'll be okay. That's not a good sign. And that needs to be really looked at and understood to get the whole depth of it. Variable mortgage rates, I know this affects different people in different ways, but this video, I explain it very clearly that if you are in a variable rate mortgage, this is what you've got to do. You've got to do this right now. Click this video and I'll see you there.